Namaskar, this is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. The newspapers have been agog with news of massive income tax raids conducted on 4 Mumbai-based asset reconstruction companies, or ARCs as they are popularly called, and the raids were also conducted on their promoters and the associate companies. Sources say that these ARCs which were raided include the Invent ARC, Omkara ARC, CFM ARC, and the Rare Asset Reconstruction Company. The tax raids were conducted at over 60 premises and have resulted in incriminating findings of the ARCs being engaged in tax evasion, money laundering, and bank frauds. The ARCs have been the main player in such crimes as per the findings of these path-breaking income tax raids into their scammy operations. The unconfirmed reports say that the total amount of such dubious transactions of these ARCs under investigation is in the range of about rupees 75,000 crores. So what is the modus operandi by which these ARCs have looted banks as well as the Indian Treasury? Let us discuss today these shady activities which involve the ARCs as the centerpiece of the entire dubious operation of cheating banks and cheating the government. Under this modus operandi, it all begins with a fraudulent borrower taking a loan from a bank and defrauding on it. Defrauding the bank here means that the borrower siphons away the bank funds generally, either by booking bogus expenses or by giving bogus advances and loans on a large scale. By indulging in such siphoning of money, the borrower has thus cheated the banks, and to the extent of such siphoning of money and diversion of loans, the money lies with the promoters of these borrower entities, either by way of cash or by way of bank balances or investments in dummy, shell and benami entities or in bogus assets, which in any case, whatever be the form, they would be illegal and illegitimate because the money has arisen out of cheating banks. So at this stage, the borrower becomes what we call a fraud billionaire, which is poor on paper but wealthy in reality after having borrowed money from the banks and siphoning away. Such big fraud billionaires like the likes of Vadhwans of HDIL and DHFL, Nirav Modi, Mehul Chokshi, Sandesh Saras of Sterling Biotech, etc. These kind of people siphon the money away into foreign jurisdictions also, away from the clutches of the Indian authorities. As we said, they are fraud billionaires. So at this stage, because of such cheating and siphoning of funds, the money has gone out of the borrower's system and into the private pockets of its promoters. The borrower company has lost the money, its finances are totally eroded, and it now thus defaults on the repayment of its bank loans. As we said, the money has gone out of the system, so where is it available to repay banks? By doing this, while the company has become poor, to that extent, the promoters have become rich and they are loaded with funds, though illegal and illegitimate. These funds have come into their hands because, as we said, they have duped and cheated banks, and they are verily what we call proceeds of crime. In this modus operandi, then in the next stage, the borrower entity defaults in making payments to the lending banks towards interest as well as towards repayment of the principal amount of the loan. After all, as we said, its money has been siphoned away by the promoters, leaving the borrower company high and dry. This is a regular format. The banks are then forced to initiate coercive recovery action, which obviously fails to yield any results because by now, the company as well as its promoters are paupers on paper, but in reality, they are not. They have amassed wealth, money which has been snatched away from the banks, borrowed by way of loans. With the recovery measures of the banks having failed to bear fruit, the stage is now set for the helpless banks to settle their loans with these borrowers at a fraction of the amount given. The banks are now game to settle the loans under a one-time settlement scheme, or OTS as it is called, willing to take a massive haircut and write off their loans and close these kind of fraudulent accounts, very often termed as willful defaulters. It is at this point that the ARCs come into picture with their dubious and devious schemes in order to cheat the banks in collusion, with the fraudulent borrowers. The ARCs are fully aware that the borrower company may be poor, but that its promoters are not after having siphoned its funds. And so they approach the borrowers and the banks saying that they will ensure that the loans do get settled. As we said, the banks at this stage are willing to take massive haircuts and settle the loans, which suits the ARCs and it suits also their borrower clients by now. The ARCs generally do this by acquiring the loan account of the borrower from the banks for a song, for which the funds which are in an illegitimate format, in an illegal mode, are actually provided to the ARCs by the promoters of these borrower companies. The funds are then laundered and paid by the ARCs into the banks in settlement of the loans. So a loan of say rupees 100 could be sold away by the banks, by the desperate banks to the ARCs for just say rupees 20, taking a haircut, a loss of 80 rupees. And even this sum of rupees 20 is received by the ARC from the borrower itself in order to repay the bank. The ARC very often has invested nothing in order to acquire these loans from the banks concerned. And since the borrower's funds are often illegal and illegitimate, the ARC is happy to launder the funds, all of course for hefty gains for itself. The entire operations, beginning from defaulting on the loan to its repayment through the medium of the ARC, where the banks take a big hit, involves tax evasion, money laundering, and bank frauds. And this is how it is done by these ARCs, which have been rated by the Income Tax Department. And what we are discussing are the findings of the tax raids. Let's first talk about tax evasion and money laundering by the ARCs. What happens here is that the illegal, illegitimate funds of the borrower built out of the bank default and frauds, whether in the form of cash, whether in the form of bank balances or any other illegal asset, are given a legitimate garb by the ARC by entries generated through shell, dummy and paper entities. And after this is done, that is, illegal funds are made to appear as legal. The same are then used by the ARCs in order to repay the bank loan under the settlement with the bank under an OTS at a huge haircut. In the process of doing this, the ARC actually receives bogus loans from dummy entities which truly are not loans, but they represent the laundered loot of the borrowers. Thus, irrespective of the form in which the illegal funds are available with the fraudulent borrowers, these ARCs have offered their services to launder the funds and help the borrowers to repay the banks. That is the first part of the tax evasion and money laundering. The second then is that the ARCs often earn huge profits in making such one-time settlements on behalf of the borrowers, which they do not return to tax, and they continue to show these profits on their balance sheets as loans received. In reality, they are profits earned by them, but then as part of the tax evasion process, they don't return it to tax. Further, the ARCs become lenders of sorts to these dubious defaulters, and they give loans out of laundered funds at high rates of interest, up to 24 to 36% per annum, and they stipulate that a part of such interest will be paid to them in cash, and that, of course, is not returned to tax. At times, the ARCs have seized the assets of these borrowers who could not repay their high-cost loans, and they have made massive profits in the process, which again, they have not disclosed, and that also remains untaxed. So this is how the ARCs have indulged in tax evasion and money laundering. The ARCs have then participated in defrauding and cheating banks in various ways, which is, they collude with the borrowers, and despite knowing that the borrower was flush with funds from the loot, flush with funds that actually belong to the bank, they have held borrowers who settle bank loans at huge haircuts with hefty commissions for themselves. So that is the first way that they have defrauded the banks, who they are expected to actually assist. Secondly, they thus help the borrowers to hide their assets which truly belong to the banks on account of loans given to them. The asset that they had was generated out of bank funds, and the ARCs were aware of this. They, of course, never informed that to the banks. Further, after such takeover and repayment of bank loans for a pittance, they transferred the collateral assets to the dummy and front entities belonging to the borrowers under pre-decided agreements in complete violation of banking arrangements. Again, of course, to the prejudice of the banks, it was the bank which was the ultimate loser. And finally, it turns out that the ARCs have often not shared the upside of recovery gains when they took the funds from the borrowers in excess of the OTS amounts. They were expected or they were contracted to share the profits of such gains with the banks. They did not do that. The ARCs that were raided were thus running a racket to cheat banks, to launder illegal assets into legal formats, and to evade taxes in a big way. A press note from the CBDT says that these ARCs had adopted various unfair and fraudulent trade practices in acquiring NPAs from the lender banks. It was found during the raids, as per the CBDT press note, that an unholy nexus existed between the borrower groups and the ARCs, and in the process, a maze of shell dummy concerns have been used in order to launder money, in order to cheat banks, in order to evade taxes. The amount at which the NPAs were acquired by the ARCs has been found to be far less than the real value of the collateral securities underlying these NPAs, resulted in banks being cheated by them all the time. And all these payments were made out of funds received by these ARCs from the borrower itself, whether by way of hawala or by way of entries received through dummy and shell entities. The IT raids have found a parallel set of undisclosed accounts to hide these scammy activities of the ARCs. They found unwritten diaries containing details of cash transactions running into hundreds of crores of rupees. They found evidence of domestic and overseas hawala. And they also found large volumes of digital and documentary evidence showing their money laundering, their tax evasion, and the bank fraud that they have committed. To us, these raids show that these ARCs are not the only ones that have been indulging in such violations, and that these are popular industry-wide practices. The tax raid findings have shaken up the entire industry, and to us, many more raids are certainly imminent out of this path-breaking income tax raid that has been conducted on the asset reconstruction companies. This is Akhilesh signing off till we meet again. Namaskar.